Unlocking wealth. What smart investors are doing for 2025. Alright, so let's get right into it because this is incredibly important. What are the smartest investors doing right now to prepare for the future, especially as we look towards 2025 and beyond? It's a question I get asked all the time. Forget the get-rich-quick schemes and the flashy headlines, we're talking about real sustainable strategies that can actually build wealth. In this video we're going to break it all down super simple, no fluff. I'm going to show you exactly why thinking long-term is your absolute best friend when it comes to investing. Spoiler alert, it involves the magic of compound interest. Then we'll dive deep into the top investment vehicles that you should seriously consider, things like index funds, ETFs, and even real estate, and I'll explain how they work in plain English. We'll also cover those essential retirement accounts that can save you a ton in taxes. And finally, we're going to look at specific, actionable strategies for 2025 and the years to come. This includes how to approach exciting but volatile areas like AI and green energy, how to protect your hard-earned cash from pesky inflation, and crucially, how to develop the right mindset to stay the course and not let emotions derail your financial goals. By the end of this, you'll have a clear roadmap to start investing smarter, not harder, and build that long-term wealth. So grab a coffee, smash that like button for the YouTube algorithm, and let's get started. The unbeatable power of time. Why long-term investing always wins. Alright, let's kick things off with the absolute cornerstone of smart investing. Understanding why long-term investing isn't just a good strategy, it's pretty much the only strategy that consistently wins for the average person. And the biggest reason for this, the secret sauce if you will, is something called compound interest. Simply put, compound interest is when your interest starts earning its own interest. It's like a snowball rolling down a hill, getting bigger and bigger, faster and faster, all on its own. Initially, it might seem slow, almost unnoticeable. You put in a bit of money, you earn a small return. Big deal, right? But over time, especially over decades, that compounding effect becomes an absolute powerhouse. Those small, consistent returns start to build upon themselves, leading to exponential growth. It's the kind of growth that can turn modest, regular savings into a substantial nest egg without you having to do much extra work beyond just staying invested. Now, this ties directly into why time in the market is so much more effective than timing the market. So many people, especially beginners, get caught up in trying to predict the market's peaks and valleys. They want to buy at the absolute bottom and sell at the absolute top. Here's the hard truth. Almost nobody can do that consistently, not even the so-called experts with their fancy algorithms and teams of analysts. Trying to time the market is often a recipe for disaster, leading to missed opportunities or, even worse, buying high and selling low out of panic. The reality is the stock market is volatile in the short term. There will be ups and there will definitely be downs. That's just the nature of the beast. But historically over the long run, the market has always trended upwards. By staying invested through those inevitable dips, you give your investments the chance to recover and continue growing, benefiting from that overall upward trajectory. You're not trying to be a psychic. You're just letting the power of economic growth and compound interest do the heavy lifting for you over many, many years. This brings me to a crucial point: emotional investing versus consistent investing. Our emotions are, quite frankly, terrible financial advisors. When the market is soaring, FOMO, fear of missing out, kicks in and people pile in, often at inflated prices. Your toolkit for wealth best long-term investment vehicles explained. Okay, so now that we've established that long-term investing is the way to go, let's talk about the actual tools you can use. The investment vehicles that will help you build that wealth. There are a lot of options out there and it can seem overwhelming, but I'm going to break down some of the best and most accessible ones for beginners and seasoned investors alike. First up, and these are my personal favorites for most people, are index funds and exchange-traded funds, or ETFs. Think of an index fund or an ETF as a basket that holds a whole bunch of different stocks or bonds. For example, an S&P 500 index fund or ETF aims to replicate the performance of the S&P 500 index, which represents the 500 largest publicly traded companies in the United States. So, by buying just one share of an S&P 500 ETF, you instantly own a tiny piece of all 500 of those companies. This gives you instant diversification, which is crucial for managing risk. The beauty of index funds and ETFs is their simplicity and low cost. Instead of trying to pick individual winning stocks, which is incredibly difficult and time-consuming, you're essentially betting on the overall growth of the market or a specific sector. And because they're passively managed, meaning there isn't a highly paid fund manager actively picking stocks, the fees, known as expense ratios, are typically very, very low. We're talking fractions of a percent, which means more of your money stays invested and working for you. You can find ETFs that track almost anything: global stock markets, specific countries, different industries like technology or healthcare, bonds, commodities, you name it. For most people starting out, a broad market index fund like an S&P 500 ETF or a total world stock market ETF is a fantastic core holding. It provides wide diversification at a minimal cost, and you can just keep adding to it over time. This strategy is what I recommend to most of my friends and family who are just getting started. Next up, let's talk about real estate. Alright, we've covered the why and the what of long-term investing. Now let's get into the how, specifically, strategies for 2025 and the years ahead, because the world doesn't stand still. One area that gets a lot of buzz is investing in innovation, things like artificial intelligence, green energy, global technology, and other cutting-edge sectors. There's no doubt these areas have massive growth potential, and it can be tempting to go all in, hoping to catch the next big thing. However, it's crucial to approach these innovative sectors with a healthy dose of caution, especially as a beginner. While the potential rewards can be high, so can the risks and volatility. These are often newer industries, sometimes with unproven business models, and they can be subject to significant hype cycles. My advice here is, if you're interested, consider allocating only a small, speculative portion of your portfolio to these areas, perhaps through specialized ETFs that offer some diversification within that sector. Don't bet the farm on them. Your core holdings should still be those broad, diversified index funds. Another major concern for investors, especially looking ahead, is inflation. We've all seen how rising prices can eat away at the purchasing power of our money. So, how do you protect your investments against inflation? Well, certain asset classes have historically performed better during inflationary periods. Real estate, as we discussed, can be a good hedge because rents and property values often rise with inflation. Owning a piece of a physical asset can be very beneficial. Beyond physical real estate, Treasury inflation-protected securities, or TIPS, are government bonds specifically designed to protect against inflation. Their principal value adjusts with inflation, so your returns keep pace with rising prices. Certain types of stocks, particularly those of companies with strong pricing power, meaning they can pass on increased costs to consumers, and those that pay reliable, growing dividends, can also offer some inflation protection. Dividend stocks can provide a rising income stream that helps offset the impact of inflation on your living expenses. Now, more than ever, the importance of staying diversified cannot be overstated. We've talked about diversifying across different companies with index funds, but you should also think about diversifying across different asset classes, stocks, bonds, real estate, and even geographically, investing in international markets, not just your home country. Diversification is often called the only free lunch in investing because it helps you reduce risk without necessarily sacrificing long-term returns. Don't put all your eggs in one basket, no matter how promising that basket seems. And this leads directly to perhaps the most important strategy of all: avoiding emotional decision-making. Alright, so there you have it. A breakdown of some of the top investment strategies to help you unlock wealth, not just for 2025, but for the long haul. We covered why time in the market and compound interest are your secret weapons, the best investment vehicles like low-cost index funds, ETFs, and even REITs, and how to position yourself for the future by thinking about innovation, inflation, and most importantly, maintaining that disciplined, long-term mindset. It might seem like a lot, but honestly, the core principles are pretty simple. The most important thing you can do right now is to take action. Don't let paralysis by analysis stop you. Start small if you need to. Even $20, $50, or $100 a month makes a difference. The key is to be consistent and to get your money working for you as soon as possible. Remember Sarah and Tom? Starting early, even with less, often wins. Educate yourself continuously, but don't wait for perfection to begin. Your future self will thank you like a lot. So if you found this video helpful and you want more beginner-friendly investing content, do me a huge favor and smash that like button, it really helps out the channel. And of course make sure you're subscribed with notifications on, so you don't miss future videos where we'll dive even deeper into these topics. And finally, I'd love to hear from you. Drop a comment down below with your investment goals for 2025. Let's make it a great year for building wealth. Thanks so much for watching, and I'll see you in the next one.